Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, December 13th, 2021. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. And we have a ton to talk about, so why don't we dive right in? Let's start with the always informative December Tankan. Among other things, I'd be particularly interested in the business conditions and dollar yen assumptions contained in the survey.
Okay, thank you. On December 13th, the BoJ released its Tankan survey. As usual, the large manufacturers' current business condition DI stood at 18 points, unchanged from the September survey. However, the future DI among large manufacturers is 13 points, reflecting a cautious outlook. In detail, the current DI among automobile makers was a weak -8 points due to supply restrictions. But DIs on other manufacturers like production equipment makers and electronic machinery makers were high at 39 points and 31 points respectively. The contrast among manufacturing sectors were stark. Japanese exporters' FX assumption rates for second half are dollar yen 108.29 and euro yen 127.14, while assumption rates remain around 5 yen off actual rates. Survey respondents did adjust their assumptions higher to reflect a weaker yen from the September survey. Japanese exports this year are on a pace to top 80 trillion yen on an annualized basis, a record high. Auto sector expectations that conditions will improve in the future by 10 points to 2 points level. We expect underlying flows by Japanese exporters to support downward pressure on dollar yen through end December.
Okay, so certainly not a universally positive report, but it does look like there are at least a few green shoots there, which is always good to see. So switching topics, I believe there are 6 G10 central bank policy meetings this week, if you can believe it. Yeah, so take us through your expectations for the Bank of Japan's policy meeting and any other central banks that you think might impact the Tokyo markets.
Okay. The BoJ will meet on December 16th to 17th, and we expect it to keep monetary policy unchanged. In contrast, the Fed will likely accelerate tapering on monetary easing following the December 14th to 15th FOMC meeting. As the Omicron COVID variant not emerged, we think the BoJ would be set to announce a scaling back of COVID countermeasure operations, as well as a Fed to accelerate monetary tapering. However, the COVID Omicron variant risk is festering, and we now expect the BoJ to both assess recent conditions and explain the exit conditions for its COVID operations while extending the operations. In the December Tankan survey, we did not see any improvements in business conditions and inflation outlooks for the BoJ to end its COVID countermeasure operations by March. And at this point, we think it will have to be extended in order to support normalization of the price transmission mechanisms.
So it's a pretty stark contrast between the BoJ and what the Fed's likely to do. I guess we'll know more on Wednesday and Friday, respectively. But yeah, you could start to see some divergence there for sure. So thanks for that. Switching topics again. As you know, of course, Japanese lifers recently reported earnings. I'm curious what the main takeaways are for us financial market participants.
Major Japanese lifers reported fiscal half-year earnings last week. The earnings showed higher year-on-year insurance premium revenue in the first half in fiscal year 21, with Japanese lifers reporting premium revenue back to pre-pandemic levels. Japan's 9 major lifers reported their asset under management rose in value in fiscal year 20, and in the first half of the fiscal year 21, they increased their holdings of the following stocks: 17 trillion yen, JGBs 75 trillion yen, domestic stocks 24 trillion yen, and foreign bonds 49 trillion yen. In the first half, fiscal year 21, Japanese lifers hedged 65% of their marketable securities portfolios for currency risk, including 55% of their dollar assets and 93% of their euro assets. Going forward, lifers will likely continue to buy more alternative investments and use JGBs to manage their durations. There may be different types of alternative investments, but large-scale investors alike all face limited investment options. Japanese lifers will likely increase their exposure to falling stocks. Yen basis will likely grow more important as a tool for currency hedging and for foreign currency asset funding management.
Yeah, I noticed in the balance of payment data that I think there was small net selling from life insurers across stocks and bonds in November. Looks like you look for the stock purchases to rebound slightly, so we'll definitely continue to watch that. I think at this point we're pretty much out of time, but I don't want to close things out without getting your outlook across yen rate, spot dollar yen, and yen basis. So please take us through it.
Okay. Dollar yen has returned to the upper 113 level. Key events to watch over the near term will be the December FOMC meeting and a BoJ meeting. U.S. inflationary pressures and a Fed taking a hawkish policy stance will likely support a stronger dollar. But a U.S. stock drop would weigh on dollar yen. We expect a neutral bias for dollar yen with trading in a 2-yen range between a 112.75 and 114.75. The yen yield curve has been roughly flat, reflecting the downward pressure from the emergence of the Omicron variant, and investors awaiting the fiscal year 22 JGB issuance plan. The wait-and-see mood out of the government's fiscal year 22 budget and JGB issuance plan has not changed. JGB appetite could pick up out of the year-end, but upward pressure on the yields could build if investors are wary of increased JGB issuances by duration. We anticipate these factors to be offset and have a neutral bias for yen rates from a downward bias. The front end of the yen basis curve has tightened, while the long end has widened due to the yen samurai bond financing. Investing flows among both Japanese and foreign investors have been mixed out of the year-end, causing the yen basis curves to steepen. The Ministry of Finance weekly securities investing data shows that Japanese net bought a modest 52 billion yen of overseas securities between November 28th and December 4th. They net bought more stocks and investment fund holdings by 1.2 trillion yen, but continued to net sell medium to long-term bonds by 1.1 trillion yen. There was a big shift from falling bonds to falling stocks. Over the week, foreigners net bought 1.6 trillion yen of Japanese securities, including 2 trillion yen of net buying of medium to long-term bonds. Foreigners were a relatively small net seller of short-term bonds by 244 billion yen and stocks and investment fund holdings by 74 billion yen. Foreigners could continue to have fairly strong appetite for JGBs. With strong JGB flows among foreigners, we revise our view of yen basis from tightening to neutral to reflect the current widening on the long end of the yen basis curve.
Okay, so neutral on spot effects and rates, and and from tightening to neutral on basis. Yeah, that's been quite a move on the basis. The front end's tightened from maybe down 30 to down 15, whereas as you point out, the longer end remains wider. For more, because there's a lot to all these topics, and it's hard to devote enough time on a 8 to 10 minute podcast to any single one of them. But for more, I would definitely encourage our listeners to check out Sekido-san's recent strategy reports. Yesterday, he put out a write up on the Tankan, and he's going to be putting out write-ups on the tick data as well as the BoJ later this week. So definitely check those out. And great stuff as always, Sekido-san. Thanks for joining us on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.